Say I make $1 million. I don't want to pay tax on that. So I take that $1 million instead of spending it on something stupid.
We're usually shocked when we see rich people buying paintings worth millions of dollars, but have you ever wondered why people pay such ridiculous prices for art? Tax evasion is to blame instead of love for art. Let us explain. Imagine you're a millionaire and you don't want to pay millions in taxes. So to avoid this, you buy a $20 million painting. Then to avoid paying both sales tax and use tax, you ship the painting you bought directly to a free port. Here's where things get interesting. Many collectors store their paintings in free ports to avoid paying taxes. This way they won't have to pay use tax or sales tax if they ship the artwork they bought straight to a free port. But keep in mind that once the artwork leaves the free port and is transferred to a new site, regular taxes still need to be paid, but they're not as high as they would have been otherwise. Alternatively, they can even sell the art directly from the free port to another collector without paying any sales or use taxes if they plan on buying art as an investment and don't plan to put it in their house. Here's how the taxes work. A sales tax must be paid in the nation where the sale takes place. If the seller is a dealer, gallery, collector, or auction house, they'll collect the tax from the purchaser and give it to the government. Meanwhile, use tax is applied when rich people buy art in one U.S. state and immediately ship it to another. For instance, if you purchase art in New York and send it to Colorado right away, you'll only be required to pay the use tax levied by the state of Colorado. Furthermore, use tax varies from one state to another. By buying it in one state and immediately transporting it to another with lower use tax rates, rich people can take advantage of it and save money on taxes. They sometimes do this intentionally to make sure that the vendor arranges the shipment, so they save money there too. Those snakes. If the vendors can't or refuse to make arrangements for the shipping, the buyer is forced to pay the sales tax. Ever since art galleries discovered that rich people evade taxes through art, they've hyped up the prices of their paintings so they don't have to take any losses. Art galleries usually do this through the sheer influence of art circles on how the artist was a forgotten genius. It's actually the story behind an art piece rather than the art itself that makes it expensive. Otherwise, even a dog can paint these days. After all the hype is created around a specific artwork with its story and whatnot, the art ends up being upwards of $70 million, gets donated to a museum, and receives a $70 million tax deduction for charitable purposes. The elite ultimately spend $20 million while saving $50 million. How crazy is that? In most situations, the valuation of these paintings has little to do with the actual painting, so believe us when we say you're not the only ones who are confused by this. The Rothko, Basquiat, or Banksy hanging in the foyer might give art lovers a sense of pride and happiness, but it's also a great way to save money on taxes. Art collectors are often asking lawyers for advice on how to hide their money from the Internal Revenue Service, according to the lawyers who are already booked up helping clients get ready for tax reforms in Washington that promise to hammer the wealthy. The answer is to give up a small portion of their ownership. It's a way to earn a tax break linked to growing art prices without actually donating a painting. The artwork typically shifts between the donor and the museum, much like divorcing parents who share custody of their child. Based on the market value, the owner is entitled to an income tax credit that might last up to 10 years and allow them to distribute more slices of that bread. The artwork then permanently belongs to the charity. Although fractional contributions are nothing new, attorneys and tax advisors claim they are becoming more and more common as property prices rise and the population moves after the pandemic. According to John Mezzanotte, managing partner in the Greenwich, Connecticut office of accounting and tax advisory firm Markham, it's best suited for people who have decided to divide their time between New York and tax-friendly Florida, leaving empty Park Avenue penthouses for a portion of the year. Mezzanotte, who has assisted customers in setting up fractional gifts, claims that if you split your time between two locations, you won't even notice the art. Dividing art ownership is another example of how the ultra-rich are finding new ways to squeeze tax benefits from their wealth, specifically as Democrats try to impose more taxes on high earners. President Joe Biden presented a blueprint for social spending that calls for a so-called millionaire surtax of 5% on earnings above $10 million and an extra 3% on earnings over $25 million. Even so, the wealthy were spared from far harsher treatment as a result of other bills being defeated, such as one that would have targeted the billions of dollars in wealth held by some rich Americans. Financial planning has become even more urgent as the value of almost everything has increased, from real estate to wine to baseball cards. And art has been particularly hot right now. Now we know why. Last year, a Francis Bacon triptych brought in $84.6 million. A half-shredded picture by Banksy depicting a little child holding a red balloon sold for $25.4 million in October, setting a new auction record for the artist. Nobody in their right mind would buy these unless it helped them evade taxes. Since the IRS withholds information on how frequently people claim deductions for these kinds of gifts, it's hard to determine how much tax is saved using this strategy. Rich investors don't usually show it off like they do with their fancy parties at their huge mansions and their super expensive car collections. According to their collection regulations, the Los Angeles County Museum of Art, the Museum of Modern Art, and the Metropolitan Museum of Art, Met, in New York, are some of the organizations that accept minor gifts. For its more recent fiscal year, the Met accepted a partial stake in 17 artworks. One well-known example is Paul Gauguin's post-impressionist artwork of a woman nursing her child. According to an annual report for the fiscal year 2019 to 2020, the museum agreed to a 10% stake in the art, but a Met official declined to respond. Probably because they're helping some ultra-rich brat evade taxes so they can buy a limited edition Bugatti. Many rich art collectors can and do save millions of dollars in taxes by simply investing the profits from the sale of the artwork in their collections. Most collectors are using this opportunity as the cost of expensive paintings keeps going up. Collectors use the money to expand their collections rather than pay millions of dollars in taxes on their profits. Even though some lawmakers hate this loophole, it's totally legal and helps art investors avoid paying taxes on their profit from selling works of art. It has proven to be a great strategy for many art collectors to increase the value of their collections while preventing the government from taking millions of dollars. Wouldn't you have done the same if you got the chance? Let us know in the comments, because we definitely don't have millions to play around with, but maybe you do. Only 3 nations account for 84% of the $67 billion worldwide art market. The US with 44%, China with 19%, and the UK with 21%. Over 44% of all art sales worldwide are accounted for by only 2 auction houses, Christie's and Sotheby's. More than $400 million worth of artwork was sold in 2019 through these 2 auction houses. What Bitcoin is to the Gen Z and millennial middle class today, art has always been to multimillionaires and billionaires. It's just a more refined and scarcer version of it. Even today, the rich get richer as they get their hands on more resources and ways to keep and increase their wealth, while we simple folk are left paying insanely high taxes and getting poorer in the process. Thanks for sticking around till the end of the video. If you enjoyed the video, smash the like button and subscribe to our channel for more awesome videos just like this.